Tesla shares are higher after the company's shareholder meeting where Elon Musk's $56 billion pay package was approved by shareholders. Joining us right now is Toni Sacconaghi. He is Bernstein's senior research analyst. And Toni, first of all, you didn't think that the shareholder vote would pass for his pay package. It did. You think this is overall a positive for the stock?
Good morning, Becky. Yes, I think it is a positive for the stock, and we're certainly seeing it in the form of a relief rally both yesterday after Elon preliminarily announced that the package had been approved, and then again this morning. The vote swung largely because BlackRock and Vanguard, who are 13% of the votes, decided to break rank with the proxy voting recommendation to vote no. So that was a 26-point swing out of about 75% of the share base that voted. And that's really what tilted the vote.
OK, so that's a big deal. Having said that, even though you think this is a positive catalyst for the stock, you have an underperform on it and a $120 price target. That is well below not only where the shares are today, but even the 52-week range, the lows of the last 52 weeks. What makes you think that the shares are going to come down that far? What did you hear yesterday at the shareholder meeting?
Fundamentally, we think Tesla is struggling. So Tesla still believes it's going to grow its units this year. We believe that units will be down. And if Tesla does try and grow units, they'll have to cut price pretty materially, eating into earnings and cash flow. But the stock, we believe the stock will do less than $2 in earnings this year. So it's trading at about 90 times earnings, about 75 times our number for next year. And this is a company that's not going to grow this year and will likely grow very modestly next year. And we think there's a disconnect between the fundamentals and the current stock price. And I think part of that is driven by the fact that this is a aspirational company, and that's what we heard at the shareholder meeting yesterday. That Elon wants people to dream the dream, and the dream ultimately is, that Tesla's going to be a robo-taxi company, Tesla's going to be an intelligent robot company, and those are big markets and can ascribe very large valuations to that. And so that's the implicit tension in the stock that today is not particularly good. Elon Musk is casting a vision of what something really good could be in the future. And this is a really retail-oriented stock. And so we see some enthusiasm for that.
Hey, Toni, the only thing is people who have bet against the stock and against Elon Musk have lost their shorts.
Historically, they have. Certainly this year, that's not been the case. The stock's down almost 30%, market's up double digits. So it has been a significant underperformer this year, as I think its growth trajectory has slowed. And my belief is that could continue to be the case.
OK. Toni, one final question. Your biggest takeaway from that meeting yesterday, the things that you heard?
I'd say there were a couple of things. One was I was struck by how promotional Elon Musk was at the meeting. I've been an analyst for 25 years. I've never heard a management team or a CEO be prescriptive about a valuation or endorse a third-party valuation before repeatedly. And again, I think that cultivates the shareholder base that is largely retail focused. And trying to paint a picture of what a dream could be. That was pretty striking to me. I think the other thing that was notable was that there was a picture of 3 uncovered models foreshadowing that Tesla will bring to market 3 new models. Yeah. I think Elon said some people may not think or will think they won't be amazing, which suggested to me that these will be sort of incremental tweaks on existing models rather than truly new models.